weekly live event. I'm going to be flying solo today. Harry might be able to join us towards the end, so we'll see how things go. Let's start with our previous picks. That's how we do all of these. That way you can gauge the performance of the system. JPM was the stock that I highlighted last week. This is where the event came out. You can see how the stock has actually had nice gains during the last 5 days. Should benefit from good employment data. ADP was decent today. We got the jobs report on Friday. JOLTS came in as expected. We also have Chairman Powell speaking today. Higher for longer. It's going to be good for financial stocks, even apart from all of the fundamental data and information that I've just mentioned. This is all you have to know. Look at that chart. These are the price patterns that you want to trade. I'm going to talk a little bit about trading mentality and how these charts put you in the right mindset and how you should not compromise on that D1 chart. Best of the best. The other stock that I highlighted on Sunday was LYFT. And so I'm going to bring that up. That was Lyft. And I liked selling it out of the money, naked put, using the 15.50 strike price, selling these for 60 cents. You can see that the stock gapped up Monday, but it pulled back yesterday. There was a good chance to get some really nice premium on it. Zoom, off it goes. I like the fact that it had found support at this horizontal was resistance. Now support. It preserved that earnings gap. We had a couple of stacked long green candles, got a little ahead of itself. I described all of this in my last video that I published Sunday, so please go back, verify that what I'm telling you is actually the truth, and then you'll get a more granular viewpoint of what it was that attracted me to this stock. But yes, I could see that it was compressing and preserving that low, and then it was ready to start taking off. I was going to take advantage of accelerated time premium decay. Those options were sold a couple of weeks out. I was able to get nice premium for them. Would have generated somewhere in the 17% return approximately. So really nice stuff. And there goes the stock higher right now. So I probably won't get assigned. When you sell naked puts, you are willing and eager to buy the stock at your short strike price. That's the mentality that you have to have going into the trade. I believe Home Depot was Harry's pick last Wednesday, so we'll take a look at that. I know that he made money on that stock the next day or the day after. So I saw him post that exit. You can also go on his Twitter feed and see him exit. I think he took $1, maybe even more on that Home Depot trade. So really nice. Almost all the trades that we've highlighted in these weekly events have worked out very well. And that's because of the system that we trade. So I'm going to be going through, I'm going to take a look at a few other charts. And first, I'd like to just go over what I was mentioning earlier about what your mental mindset is and how does the context of the stock impact where we are mentally with the trade. So I'm going to put up JPM because it's such a super strong example. And you can see how there are hardly any red days in here. There are certainly no retracements on this chart. At most, we get a compression for a few days and then we release to the next high. We get a compression, release to the new high. Okay, now here you've got earnings. So yeah, we'd want to get out during that earnings announcement. Stock pulls back, finds support at AVWAP-E. Here we go again. Now we're breaking out to a new relative high. Get a compression, off we go. So the reason that this chart and this pattern is so important, and by the way, Pete, you're just picking the best examples that are out there. Anybody can see this stock's going higher. Yeah, that's the point. This is not a guessing game. We are paid when we predict future price movement. That's how we get paid. So to go and find herky-jerky stocks that are all over the place, who knows where they're going to go next? And I'll show you a couple examples of those too. Do not compromise on this daily chart. And the reason for it is you always hearing myself talk about add to your winners, add to your winners. When the stock is all over the place, how are you going to add to a winner? Every one of these dips looks like, oh, maybe this is the one that really rolls over. Oh, now the stock recovers and you're thinking, I'm not going to add. I just got that shit scared out of me on that last move. So you're not mentally prepared to add to it versus a stock like this. Breaks through horizontal resistance. Okay, above all the major moving averages. Fantastic. LRSI confirming. Nice. Probably has broken through some downward sloping high minus trend lines. Now I'm in. Ooh, awesome. Stacked green candles. Excellent. Am I ready to add? Let's see if the dip that is bound to be coming here is brief and shallow. Hey, we don't even get a dip. There was no dip. There was no retracement. Now, this compression is resolved to the upside. I'm going to add here. And I'm not even remotely worried that this stock is going to pull back. Why not? There's nothing to indicate to me that there's any selling pressure in this stock at all. Okay, so we add here. Now we start moving higher. Okay, now we get a long red candle. Well, we'd want to check to see what the market was doing. This could have been completely market related. And the first one alone, we're not going to be too worried about. Yes, the stock has advanced nicely, but it's making an orderly grind higher. No long red candles, no big retracements here. And it's easily erased in the next few days. Fantastic. We can add here because we've already seen that any little selling pressure was instantly absorbed. Well, what is that really telling us? It's telling us that institutions are in go, gotta have it mode right freaking now. Any little dip, they buy like mad. Well, good, because I'm in a mentally good place. I bought some here. I added some here. My average cost is right here. I get this dip here. I'm adding here. Now my average cost might be down in here. I have a really nice sized position on. Am I worried? No. If something horrible happened, I could always scratch if the stock pulled back to this level. But I'm not even going to cast doubt on the position. I'm just going to ride it higher. Okay, now we start coming into earnings. I'm going to take profits, and I've got huge profits all along the way. I'm not setting I should set a 10% target profit on this because that's what I read in the book. No, you're watching the price action. The price action is telling you that institutions are in there gobbling up as many shares as they can get. So that's where your mental state comes from. It's feeling confident that this move is going to continue. Now, with this type of buying pressure, and I've talked about this with the overall market too, because we're going to take a look at the market in a second. It's had a very, very strong pattern like this. What do we know when we have super, super strong trends like this? What's my downside? Because your mind is always worried that, oh my gosh, on the way up here, I'm going to be the idiot who gets the rug pulled out from under them. Pigs get slaughtered, buy low, sell high, all the market adages that you hear start to cast doubt. And you're like, oh God, I'm making so much money. I got to take profits because I don't want to be the idiot. Well, you have to remove all of those thoughts. And the prevailing thought that would keep me in a position like this is that all of these buyers who just can't get enough of this stock, are they instantly going to just throw in the towel? These guys are investing for years out. Are they all of a sudden just going to decide, no, that's it. I've made enough money on the stock. I'm just going to get out here and just sell everything. Just get out. No, they're not going to do that. They're waiting for a dip here. They're waiting for a dip here. They're waiting for a dip here. The dip never comes. Now they know if they want to have a position in it, they have to pay up. So what does that mean on the backside? That means that any dip that the stock has on the backside, they are going to be licking their chops because they need to get in. They want to get in. And so in the back of my mind, I need to convince myself that, hey, any dip that the stock is going to have that might possibly cast doubt is going to be gobbled up, and I can expect a bullish flag formation. Now, if I get that pullback and I start stacking some red candles in here, and it's a little deeper than anything I've seen previously, okay, that's going to be a little bit of a warning sign. But even then, I know that buyers are going to scoop that up. And if they're super aggressive, it'll be a bullish flag and there will be a new high. I might even add to the position on that pattern. So if they try and buy, and now we have a lower high, double top, then I can see that, you know what? That was pretty heavy selling right in there. The stock has lost its momentum. And even though this is a lower high double top, I'm still going to be pretty close to where I was at its prior peak. And I can exit here and take those big gains. So all the way up, the prevailing thought is, worst case scenario, I get a pretty deep dip with some stacked long red candles and the stock tries to recover. It gets close to the previous high, but it never quite gets there. That is my sign to exit. And that type of pattern gives me confidence to buy here, buy here, buy here. You're not going to have that level of confidence if you pick shitty stocks. So I can go through the list and take a look. And if I go through this list, then I'm going to be finding a lot of really good stocks because this is a bullish search. You're not going to have the same confidence trading a stock like MRVL because here we go. Okay, marginally decent stock to trade. Okay, when I say marginally, yes, it's in an upward sloping trend. It is above all of the major moving averages. But look at this back and forth. Here we go. Here we go. Oh, look at that. I got a downward sloping breakout. Long green candle closing on its high. I'm going to buy in here. Oh, this looks great. So everything looks great in here. And now the move's starting to stall out. And then, woof. Whoa. Where in the heck did that come from? You're long in here, and now you're losing money on it. Are you going to be wanting to add? Probably not, because you are not in the right mental place for this. When you start lining a trade like this up, then you buy right here, you look at this choppy price action, these tiny body candles, and whoa, it just came out of a pretty big dip right in here. This stock is not nice and tight like JPM that I showed you. So you get this dip in here. Do you have enough guts to come in and buy it right here? Maybe you do. Maybe you can add to it. Well, it was certainly a nice move. So Marvel is not the best example, but I can find lots of stocks that are just kind of moving sideways that are not great candidates. So maybe I'll go into a breakout search here. And I'm going to try and find, and because these are searches. There's another pattern I could talk about right here. Um, because I am in some of the searches that we use to find the best stocks, we are going to be looking at the best stocks. The one thing I will tell you about a skyscraper like this is when you start buying these breakouts here, that's fine. You're not going to have the guts to really be chasing these type of stacked long red or long green candles, and that's fine. But what you would want to do is you're going to be super tempted to exit this trade, and it's probably going to be early. I don't know what Root is, they're a financial company, but in any event, just hang on to it until you see a long red bearish engulfing candle or a bullish hammer that went much higher and closed on its low. That would be a sign of resistance. Until then, you just kind of ride it. So you're long down in here. Maybe you added right here. Now you're just riding that move higher. And yes, you are getting greedy, but it's okay because this thing is telling you on this volume, it's going to go higher. So wait for that long red candle and then exit right off the top. Bearish engulfing candle is usually what you're going to see because the stock will gap up to a new high, and then the sellers will come in with a vengeance and it'll close on its low, and that's what forms that bearish engulfing candle. So yeah, you don't need to be chasing in here, and most traders would be too disciplined to chase it in here, but they will be long here and they will add in here. And you don't want to buy stocks when they start distancing themselves from the EMA 8. So enough said about that. I'm going to take a look at a few questions here and see what we've got. And also see if I can find just a normal stock that's kind of chopping around. This would be a good example. If you're trading a stock like this because yippee-ki-yay, downward sloping trend line, break out through all the major MAs, and you're in here trying to make money on the upside, you do not have the confidence to trade this thing and to add to the position because you're looking at all this choppy, crappy price action before. And people fall in love with stocks and they keep trading them even though the charts are inferior. They're horrible. They're terrible. They look nothing like JPM. So if you're struggling with the mental aspects of trading, you're probably not picking the best stocks, because if you pick the best stocks, there's absolutely no question in your mind where it's headed. So let me take a quick look and see what we've got question-wise here. Let's see here. Is it wise to open a trade on Garmin, which is a stock that I highlighted, I believe, 2 weeks ago? It had just come out post earnings. Yeah, I like it in here. You can get long the stock because it's continuing to move higher. You can sell an out of the money bullish put spread keying off AVWAP E 135, 130 for $1. Yeah, you could sell that. I mean, I'd like to have more than just the AVWAP E working in my favor for bullish put spreads. And the reason for that is that you've got to take out multiple support levels to get to your short strike price. In an instance like this, now it kind of, ideally earnings announcement, sideways, sideways, sideways. And then I have a chance to sell an out of the money bullish put spread down here at 130 where I've got horizontal was resistance, now support, opening of the gap. I would feel better selling a bullish put spread on that type of pattern. But now that it's starting to take off, it's showing you that it compressed a little bit, but buyers are aggressive. They want in. So I'd be more inclined to just ride this higher and buy an in the money, longer term, 3 months out, in the money call with a delta of 0.7 or higher. It becomes a surrogate stock position, or just buy the stock. So, dang, here is a perfect example of what I was talking about. So you buy Garmin in here. Hey, nice. This is nice. Okay, it's starting to creep higher. This stock is relentless. There is absolutely no pullback in this stock at all. I'm going to buy some more here. Huh? Look at this puppy run. This is nice. Okay, I'll buy some more right in here. So with the knowledge that when it does dip, I've got a pretty decent sized dip here that I'm going to be able to sell pretty close to that high because I'm going to have that double top, lower high. Do you see how close the stock got to this high? So I'm not in here and selling here and in here and selling here and in here and selling here. I could scalp, and that's the normal progression for traders is they're just so nervous all the time. They'll be in here scalping it. Well, it's okay. I mean, if you just cannot hang on to it, but I'd urge you to at least have a small position on. You don't have to add, have a small position on and try to ride these out. If you can get through a few of these trades on your own, then in the future, you'll have the confidence to start adding to the position as well. But yeah, it's a pretty big, scary drop. But if you know that this type of strength is going to be gobbled up, then it's that next surge that buyers have been waiting for, buying the dip. It's that next move higher and that lower high double top. That's where you take your profits because you can see that is firm resistance. So that's how you trade it, and that's where your confidence comes from. All right, so just trying to see what else you guys are posting here. You have a problem that you fall in love with the stock. Well, if you're falling in love with the right stock, if you're falling in love with this stock here, that's a good thing. Because even if you're in and out, you're still scalping and you are selecting the best. If you are falling in love with a stock that is moving sideways like CEPH that I showed you earlier, that's not good. That is a terrible looking stock. You need those nice tight patterns. If you have them and they're breaking out, those are great. What does it mean if the stock is choppy in the long term, but it has relative strength the last 5 days? I don't know. It doesn't mean anything. It means it's got a little relative strength relative to the market. If it's super choppy, choppy stocks are going to go through relative weak and relative strength phases. So I can't make a general statement to you because every stock is different. Every chart is different. That's why we rely heavily on technical analysis and pattern recognition. So if I looked at CEPH, it probably would be going through periods of choppiness and relative strength. I think it was CEPH. Maybe not. Can't recall what the, CELH. That was the symbol that we were looking at. And we'll put up 1 OSI. And there you can see it goes through phases. You know, just because it went relative strong in here, does that mean I'm buying? No, it's choppy as heck. I have no interest at all buying this stock. This is trash. This is garbage. This is, this is just a mental problem that you're going to have constantly because every time you get in here and it's like, ooh, 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 there it goes, ha, making money. And then the bottom drops out and your heart drops out. And you're like, I just can't figure this out. It broke out. It looked so good. And then the bottom fell out. I can't figure the market out. It's all random. Well, it's not random if you pick the best stocks. All right. I don't see a lot of questions coming up. So I'm going to take a look at what the market is doing. And we might as well go back and take a look at, I'll show you a little bit of technical analysis from yesterday, but first we're going to take a look at where we are in the daily chart. So the market has been marching higher. This is a upward sloping trading channel. You can draw the lower end of the trading channel just like that. You can draw the upper end of the trading channel just like that. and it is relentless. It just keeps going higher. Dips are brief and shallow, but we are getting into some spotty price action in here. We've got some gaps. We've got some gaps up in there. We're starting to see a little bit of retracement. Yesterday, we took this long green candle from Friday and we erased the whole thing. I don't like that. The fact that we erase a long green candle that came on a relative high, we've got to recover that very quickly. Well, we're doing that today. So that's encouraging. We've got the employment numbers coming out this week. We have the jobs report, which is probably the granddaddy of them all. That'll be heavily scrutinized. I'm expecting a good jobs number. I'm also expecting the 0.6% wage component that we had last month to be revised lower and to be coming down to maybe 0.3%. I believe that spike was due to a lot of states increasing their minimum wage January 1, and that bared out in the numbers. So I think it's going to be a market-friendly number. Anything in the 200K range, even 170K would be good, especially if that wage component comes down. We've got Powell speaking today. He's splashing cold water on the market. Doesn't matter. Market continues to go higher. He's reminding everyone that it's going to be higher for longer. We want strong economic data points. So anybody that tells you good news is bad news, you got to just tune them out, because we want really solid job growth, very good economic growth. Inflation's starting to come in line. These are good for corporate profits. It's good that people have work. It's good for banks because they are able to pay off their bills. There's very few credit issues. So we want a robust economy, even with interest rates staying elevated. This is a theme that I've been telling you for months. So if we all of a sudden start losing jobs and all the economic data points start to deteriorate, that could prompt the Fed to cut rates, but it's not a good backdrop. Then all of a sudden, yeah, you might get a couple of days of rally, temporary rally on that type of news because the market's addicted to easy money. But the underlying theme is, hey, the economy is starting to weaken. Did the Fed wait too long? That'll be the next concern. So we do not want to see any kind of economic weakness. Look for nice, strong numbers. The other thing is that the rest of the world, we're kind of having to pull everybody out of this malaise. The EU is very close to a recession, flat growth the last 2 quarters. Japan is in a recession. China is in disarray. They've got tremendous problems there. I don't see their economic growth coming back for a very, very long time. So we're the best game in town right now. So we had better hope that we are able to pull everyone up. So yesterday we get a gap down. And what I was going to mention is that early on, you get this compression, this little drift lower. And this long green candle, I cautioned everybody on yesterday because you blew through VWAP. You made a new high of the day and you were right into the gap. Well, this is the kind of thing that's going to attract a bunch of bullish speculators because, oh, we've got a little bit of a bullish hammer here, little bullish hammer here. Oh, this is a compression. Oh, the market's been so strong. And so you get this long green candle that attracts everyone, especially new high of the day and in the gap. Oh, this is it. We're going to fill the gap. We're going to fill the gap. Don't bite on one long candle. We would rather see 2 or 3 of these consecutively, but that's not what we got. We got one gigantic long red candle, and this was just a fake. And when it got hammered down, when this long green candle got hammered down right in here, I knew without a shadow of a doubt that we were headed lower. And the market never saw the VWAP the rest of the day. So this was some heavy, persistent selling, and you can see that in the chart here. So, okay, we're starting to see some selling pressure. Today, we gapped up. We don't need to chase a gap up. These sellers are not going to go away easily. So we probe for support. We hold half of the gap, which is what we'd like to do. This is where your entry point starts coming into play. We've got a bullish 1OP cross in here. Now you can start to feel pretty good about it, especially when we get above VWAP. Now we get above the high of the day, and we're in this gap from the previous day. All right, I can feel pretty good about getting long in here. You get one long red candle that's quickly erased. Yeah, things are looking pretty good right now. We're not advancing much. We've got Powell speaking. So I think that just from a daily chart standpoint, with this type of patchy price action on a swing trading basis, you can sell out of the money bullish put spreads. That's a good strategy to use. Distance yourself from the action. When we do get a dip, I believe it's going to be relatively brief and shallow, and I base that on the strength that I've seen in the market. Other dips have been brief and shallow, so that should continue. So, and we have possibly a nice little surprise component Friday with a lower than expected hourly wages component. So we're going to take a look at a few bullish stocks, but first I want to see if I can answer any questions that you might have. So let me do that. I'll take a look through here. Yeah, I'll take a look at some of your stocks later. Do I personally use HA candles? Yeah, I like HA candles more for their sensitivity with regard to buying dips. That if I have a super strong stock, I guess NVIDIA would probably be as good as any. So let me go into a search that's got a lot of bullish stocks in it. And then we'll put up HA candles in here. And, you know, you're not getting any. I mean, this is just solid going higher. NVIDIA has been so strong. But where you do get a flat top red and then a green bottom, you take a look when you get that alert and you go, man, the stock didn't even dip during that HA reversal. That is excellent. Here, you get a flat top red followed by a flat bottom green. So now you get your trade alert and you go, you know, that wasn't much of a dip. So yes, I'm very confident getting long in here because we've seen a tiny bit of selling pressure and now we get long. So I like to use HA reversals more for the alerts. Very easy, an Option Stalker Pro. So if you are a swing trader and you're looking to set an alert, create alert, I'm going to do this on a D1 basis. I'll select HA reversal, D1, whoops, H1 there. And when it crosses to bullish, let me know. Now it's going to know that it's already bullish now. Our servers know that. So it's got to have a flat top red and then a flat bottom green, and I'll get that alert. And it may come in a day, it may come in a week, it might not come for quite a while. But when it does, I'll be able to evaluate that dip and then decide if I want to get long. You would use the same concept if you were trading a really strong stock. So let's go into the M5 of, I've got Costco up here right now. And you can see Costco has been a little bit choppy and a little bit volatile. So let's see if we can find a better example. You know, there you've got an HA reversal. Stock stayed above VWAP. Yeah, I can buy NVIDIA in here with confidence because now I've got my green flat bottoms here and we preserved the VWAP and the market was also looking good. So
there, Pete.
It's going to be more sensitive than Harry. I think Harry has just joined us, so we're waiting for his video feed here.
I'm having trouble with the video at the moment, but I am here.
All right, awesome. So just kind of talking about using HA reversals and using HA candles as a form of technical analysis. So the nice thing for HA, and I'll conclude with this, is that when you are on a trade, just like I showed you JPM, and you see all these green candles, it's easier mentally for you to stick with the position, because until you start seeing some red candles, there's no question that the stock is going to continue to go higher. And so, yes, you want to use it and look for this type of pattern where it's just solid green. So I think, as I recall from last week, I think your pick was Home Depot, and I think I remember you taking profits on that the next day.
I did, yes. Yes, as you can see, it's continued to go up. And if you took profits on it by Friday, you would have done really well. I also mentioned Amazon, which again, if you took profits by Monday or Friday, you would have done really well there too. So I had those two picks. I'm currently long CAT right now, and currently long C. So I have those two picks, and I did very well with a SPY straddle.
Yes, you bought that yesterday. Do you want to talk about what your thinking was there? I kind of went through the price action of the SPY yesterday. So you get this big drop. What were you thinking when you put that straddle on? You bought the straddle, by the way.
Looking at the increasing ATR on SPY, I was looking at the range of only plus or minus $4 on the strangle. It was the strangle and the straddle, and concluded that the options were a bit underpriced there, so I was taking advantage of that. And then I cashed in early on in the challenge account. That position made about $1,000. The account is up over 25% now, so doing well. And everything back on track there with it. But those straddles have been doing well for me, considering we're getting a pretty, even though on an overall basis we're going nowhere in a way, but we're getting some decent swings. So just taking advantage of the volatility.
Right, and also the fact that after a big down day like yesterday, well, you do a straddle because maybe we open lower. Maybe we get some follow through on the move. Maybe we gap up and we bounce. Either way, you're covered on both sides, and that's why you chose to do a strangle versus just buying calls, let's say.
Right. I do have some questions here. Do you use any order flow software? Well, Option Stalker certainly has a great deal of information on option order flow. But I think what you're probably asking more is whether or not I use software to look at sort of those large option orders that come in. And not really, no, I don't. I mean, I'll look at any unusual option activity that comes in and see if there's something behind it. But it's certainly not even a minor part of my trading.
I'll add a little bit to that. There's option software that looks for unusual options activity. And my take on it is this, that by the time that unusual option activity is flagged, the market makers on the other side, you're talking about Citadel, they know they are on the other side of a large order. Instantly, those programs are going to adjust. Well, how do they adjust? What do you mean they adjust? They know that there's some news out there. They know that there is a large buyer of options. And so what they do is they immediately widen the bid-ask spread, and they pump option implied volatility into those options. So for you to go in and to get that report and, oh, hey, IBM has high option call volume, let's say. By the time you get that news, even if it's milliseconds later, those prices are already adjusted. There's no edge there for you. So the tail, by the way, does not wag the dog. The reason that the large option volume is there is because the stock is doing something. It's moving. So that's my take on it. If you follow price and you follow the underlying, you'll be much better off. You don't need that software.
Yes, I agree. Let's see. I got another question here. Thoughts on Lilly? Is it a good trade to swing? I don't know. Did you cover Lilly yet, or
I haven't, no.
no? I wouldn't do it today. I mean, market's screaming higher. Lilly's below VWAP. I'm not saying Lilly's not a strong stock. It's obviously at a resting point right now. It hit an all-time high and then backed off. I would hold off on a trade with Lilly. But a good time just to have gone in on Lilly would have been a few days ago.
Yeah, back in here, like off that AVWAP would have been a decent entry point when it bounced off of that. Then you, on this gap higher in here, you could have gotten long. You have also a little bullish flag formation, downward sloping trend line here. Yeah, right in there on March 1st, you could have taken a position.
Should you always buy a call when the stock meets the lower resistance line? Well, I'm not exactly sure what you mean by the lower resistance line, but I'm going to tell you right off the bat, any question that is, should you always, should you never, I'm going to say no. Everything is contextual in trading. Should you buy a call? Should you buy a call debit spread? Should you buy the stock itself? Should you do a bullish put spread? Should you sell puts? Those are all bullish positions, just different ways of going about it. Also, what is the market doing? It doesn't matter what, if the stock has met whatever you're calling the lower resistance line here. Is the market weak? Is the stock relatively strong? All of those things will factor in. So I'm going to say no to your question. Do you know what they mean by lower resistance line? Kids these days with their crazy terms?
I think they are confusing support with resistance.
I
think
see.
they mean,
Yes.
should you buy it when it hits the lower support line?
Got
and
it.
A lower support line, probably I would assume that they are looking at some type of trading channel, which not all stocks have.
Yes. If you meant resistance support, then no. You need confirmation it's bouncing off that support. And then you need all the other things as well. My question is, do you have a video that covers your indicator setups for M5 and D1? Yes, Pete and I both have videos in that. You got to look for them and find them. We're not going to hand it to you. They're not that hard to find. Thoughts on Dell? I mean, Dell didn't get accepted to the S&P, but the earnings were really good. It gapped up. As long as that gap holds, Dell might be one that's good for a bullish put spread at a certain point. If we get another nice hold tomorrow on that 116 gap, you could certainly look to start looking at a bullish put spread on Dell.
Yeah, try to let 6, 7, 8, 9, 10 days elapse after that initial earnings reaction. Let the stock settle down a bit. And what you'd like to see is, just as it's doing, minimal retracement into the gap here. And then as some of this profit taking wanes, buyers will start to get more aggressive, and eventually you'll see the stock find support, and then it'll start to creep higher. Well, as soon as that support is established, and a good down day like yesterday will help you identify that. So market down huge yesterday. Dell treading water. Hey, buyers are there. I know they're there. They're supporting that stock because otherwise it would have sold off hard on a day like that. You had a little bit of a, you could see how much higher off of the low the stock closed. So, hey, okay, there's my first really decent sign that the stock wants to go higher.
Can we use order flow as a secondary confirmation? Again, no, guys. Read the wiki. Read Pete's articles. Don't throw darts out there of, can we use this? Can we use that? You know what? Every other trader out there finds a new holy grail. Oh my God, I'm using order flow now, and I'm using this new method and that new method, and you know what happens to all of them? Yeah, they lose their money. So no, you cannot use it as a secondary confirmation, a tertiary confirmation, or any type of confirmation. Use price action as your confirmation. Use the market as your confirmation. Do not use because some whale out there decided to buy 1,000 calls on the ask that expire in a month. They must know something. No, I mean, is it good? Is it nice to know? Yeah, but if you're going to take it as like this big, gigantic piece of information that should determine your trading, you're better off staying away from it. Thoughts on 3M as a long? Would be really great if you guys told us what you thought of the position, and then we'll let you know what we think of your analysis rather than just say, how about this ticker? How about that ticker? But fine. 3M. Yeah, it looks fine. It bounced off the 15 EMA on the daily. It's above all SMAs. It's, oh wait, I'm looking at MMC. Hold on, 3M. Sorry, wrong one. Oh, that's a different one. 3M. No, it's shit.
That's who I was like, oh boy, I'm going to disagree with Harry on this one.
Yeah, no, it's shit. Sorry, I was looking at MMC. No, 3M is crap. I wouldn't go short. I wouldn't go long. I wouldn't look at it any longer than 82. It's gone. Bye.
And this is a classic example. I put up JPM and I explained why that chart puts you in the right mental mindset, because it has no dips. It's continuing to move higher long term, blah, blah, blah. This stock is still heading down. What is there possibly that could tell me that I need to be long this stock? If it starts breaking through all of these major moving averages with some long green candles, okay, but it's got to prove it to me. It's like somebody that's, constantly lying to you. They're a liar. They lie time and time and time and time again. But no, this time I'm going to trust them. Why? They can't lie that many times in a row. This stock is heading down. There is nothing here for you to trade. You're trying to predict price movement. How do you know this stock is going to rally up? Any little head fake to go through the AVWAP-E here could instantly long red candle through the low, see you later, and then you got your head in your hands going, I just don't get trading. Maybe this isn't for me.
And maybe they're right.
Could be.
Maybe it isn't for them.
Don't be a bottom picker.
Let's see here. Hi, Pete. Are you looking for signs of this bullish uptrend dying hard, as you mentioned a few weeks ago? If so, what signs are you watching for? Thanks for all you do.
When did I say that this market was going to die hard?
I don't remember that.
I'd love to go back and see that. I didn't.
You said bull markets die hard, basically meaning it's going to take a lot to stop this upward trend.
That's exactly what I said. I said, This is a battleship with a full head of steam. It is going to take an awful lot to turn this battleship around. And before that happens, you're going to see a double top lower high. So until you see that nice dip with lots of stacked red candles testing major support levels, and then the bounce that can't quite get back to the high, until you see that, you stay long.
Let's see here. Someone said, I like Airbnb here. If it retests the 163, 165, yields down, small cap strong, looks like a strong breakout of the base. What do you think? Airbnb, I think I agree. I'm just seeing if there's not a trend line of resistance here. Oh, it broke through that. I agree. I like Airbnb here. I like the breakout. I like its relative strength at the moment, above all of the SMAs, above its upward trend line. Airbnb is a good long, and that is a good call out by Double J Studio.
So Double J Studio, I got the chart up right now. Nice. It's not the nice, super, super, super tight price pattern that we like, but it's not bad. So how do you approach this? Well, you don't need to chase breakouts first and foremost, but you sure could sell a 155, 150 bullish put spread, which would be below this horizontal breakout and right around that AVWAP-E, on the notion that this stock chops around a lot. And I can weather that by selling this out of the money bullish put spread. And when the stock pulls back, I'm not going to be freaking out. And these types of moves can frustrate you, because if you bought it back in here, it's like, there's a dip. Oh, well, here it goes. Here it goes. Now it's getting better. There's another dip. Every time we try and make a little bit of progress, we give it all back, and that gets frustrating. So this is a great candidate because it's a little bit more of a choppy stock, but the trend is good that you can sell those out of the money bullish put spreads on something like this.
I agree. Out of money bullish put spreads, when you have a market, particularly when you have a market like this, right, where I know what a lot of you are thinking, how much higher can it go? It's all the way up there. It's going to retrace at some point. And it did just that yesterday, right? As you see, it's screaming right back up again. And you're afraid. You're afraid to go long. And, there's ways to deal with that. You can keep it short and tight where you're day trading it, right? Where you're just playing the price action of the intraday. You can reduce your position size, certainly. You should be trading one share because I doubt many of you have reached the threshold where you should move beyond that. But let's just say an imaginary world where all of you think that you're good enough to not trade one share, you should reduce your position size. Or you can look at things like bullish put spreads, right? Where you're really betting on a high probability trade that requires a stock to break not one, but two major points of resistance. And in doing so, you can weather some downturns and still wind up with a profitable trade. So that, and there's a lot of great charts out there right now that allow for some good bullish put spreads, which I might be putting on myself in the challenge account very soon. So I
do have a long. This is not going to be a surprise because we've all been waiting patiently on this stock to finally show its true colors. But IBM is a really nice looking long. And I put it up earlier and we were waiting. This compression took an awful long time after that earnings gap up. But eventually it got back above AVWAP-E. This is kind of your entry point in here, but it's starting to clear horizontal resistance, and now it's making a new high for the day. Great looking M5 today. Look at that. Really good volume. Beautiful. So when you're day trading, same thing as I mentioned earlier with JPM. No big gap up. It had a little bit of a gap up. We get through the prior day high, but we didn't open up here. Like 10, 15, 20% higher. You don't need to be trading stocks like that. And then we get this nice, consistent green candles the whole way up. Got a little dip here, way above VWAP. No problem. Couple bullish hammers. There we go. So yeah, IBM, I like the price action today. I like the D1 price action. That's going to be my pick for today.
I like that. IBM. I mean, I sold it I had those calls that expired on Friday, but I mean, I sold it Friday morning. If I would have just held to the end of the day, I actually would have been in profit on those. So that would be, I do like IBM. I liked it last week. I like it now. By the way, I think the JOLTS number comes out in 8 minutes. So just a note on that. That might move the market here. Got a lot of questions here. Wow. Okay. UNH making his 6-month lows and not far from 52-week lows. Good short here. Otherwise, news-driven price action. Well, that's exactly right. It is news-driven price action. But I mean, if you're going straight on the technicals right now, yes, UNH. If you were to short now, where something like UNH comes into play is, let's say right now you're in a bullish market. You have a lot of longs on, a lot of swing longs on, but you want to balance it out a bit. You're worried of a pullback, particularly after yesterday. You could put a put debit spread on something like UNH. It's a expensive enough stock, and you can do a put debit spread there. And after money put debit spread expires Friday, and hedge a little bit, but it's still a good position on its own right. That's sort of how I would play a UNH.
Too choppy for my taste.
Nice. Yeah, I mean, it's news driven, right? I mean, this is a stock that, one thing is always true on news, right? I mean, things tend to get exaggerated in one way or one direction or another, but you never should try to time exactly when that bounce will occur. You'll always get that severe drop or that huge bump up. Rarely do you see that continuation. When you see that, then but usually at some point you get this reversal. Maybe not a complete reversal, but a reversal, but you can't play those because there's no way of knowing how much institutions have to rebalance their reaction to the news, which is sometimes algo driven.
Yeah, if you on that stock, if you look at the price action 4 days ago or 6 days ago, in here you've got this nice long red candle and then this big gap down, and the stock falls apart during the day, and you're like, oh yeah, baby, here we go. This is going to be a great one. And then it runs all the way back and closes on its high. That shit drives me crazy. And I just assume not trade a stock like that. I've got so many other good stocks that I've already shown you that are on a beeline. They are on like a straight line. You could take a straight edge and draw from the lower left to the upper right. That's the kind of stock I want to be in.
Someone points out TMUS. I like TMUS. I like the daily on TMUS. TMUS looks good. Nice breakout into the all-time high, continuing. My biggest thing on TMUS is, I mean, the ATR is shitty. And, look, you're not going to get huge moves. And so what does that mean? Okay, normally that's fine. However, because it's at the all-time high, if TMUS, let's say, backs off, you better give yourself some time on that trade because it'll take a while to recover. But look, technically, TMUS just broke through its upward sloping trend line today. It's got a really nice move. It's a strong stock. I could see why one would look at TMUS and go, yeah, that's a good long.
Yep. And on that, I've got the 5-minute chart up. So when you start stacking long green candles like this, and you're like, oh my God, I got to buy it in here. It's a cellular phone provider. I mean, for crying out loud, somebody's in there buying, and that's why you've got this. There's nothing else going on with it. Be patient. You pull back in here. All right, now I feel pretty good that all of these gains have held. I can buy it in here, but I don't have to be FOMO Joe in here trying to gobble this stock up and chase breakouts on it. And if you look at the last breakout that T-Mobile had, always go back and look at the previous chart. What did it do previously when it broke out? Well, it broke out and then it pulled back. Well, this time it's breaking out and it's actually got some follow through. So I would feel much better buying this type of breakout where you get the long green candle breaking out and then you get follow through. Okay, yeah, I can get behind that.
I got a lot of questions on a snow trade I did, which I love, by the way. 9 out of my last 10 trades were profitable. I made one trade that snow broke through support. I thought it was bouncing off support. It was at the time, but yesterday's deluge of market hellness kind of squashed that. And there's probably around 6 questions in there about, why'd you take snow? Why are you still holding snow? What's going on with snow? Gotta love when people focus on the one trade. The one trade that no one's having 100% win rate here, people. And if I did, you should probably stop following me because it would mean I'm full of shit. Be happy that occasionally I have misses. It means I'm a real trader. That's what happens when you trade. There's anyone who has 100% win rate, they should be investigated by the SEC immediately. So snow right now, yeah, it's a losing position. It's a crap position. And I will probably take the loss unless some miracle of news occurs.
That could be shortable as well.
Yes, probably is shortable. Let's see.
What are your thoughts on Marvel? I've got that question here, and it's got earnings tomorrow. So, I don't want to let the cat out of the bag, but here he does post his trades on Twitter when he does earnings trades.
Yep.
I personally don't trade over earnings.
I have 15,000 shares in Marvel, and I'm probably going to hold them. But I don't know yet. I mean, I am up $12 a share. My average entry on those shares is $70. And right now it's at 82. So it's a pretty good win on that. My inclination would be to take the profit. So, but I will see. I have time until tomorrow after hours before I close it. By the way, as a reminder, I don't know if I said it or not, starting tomorrow at around 10:30, I am heading out and going to Vegas. I'll be in Vegas Thursday and Friday. So I'll check in throughout, but I will be in Vegas. I don't know if anybody out there is in Vegas, but that's where I'll be.
Go check out the poker tables.
That's where I'll be. Bellagio poker tables. That is the place. Let's see here. What else do we have? I mean, there's just no. I mean, the market 511. I mean, we're going to have here. Do we get the? Did we get jolts here? When did jolts?
I thought it came out at 9 this morning, a half hour after the open, but I could be wrong.
Jolts. Might be, yeah. I don't see it though. I'm looking. I'm trying to see any jolts numbers. Oh, okay. No, that's the draw. Jolts. Oh yeah. Sorry. Jolts did come out. Came out 10-8. Yeah. All right. 8 points came in low. Job openings down. Expecting 8.9, came in 8.86. Actually came in pretty much flat. Inventories down. I mean, we're kind of in a bad news is good news situation. So, but that was sort of a no news right there. Okay. Other questions? Can OBV divergences be helpful in picking stocks? No. It can be helpful in analyzing stocks. It can be helpful in looking at the kind of change in potential coming change in trend. If you have an OB divergence combined with OBV divergence combined with an HA reversal at the same time, that could be indicative. It's basically saying that the cumulative volume in going positive or negative is going in the opposite direction of the stock. And that could indicate that there is some days of heavy selling and then days of moderate buying, and that could indicate an upcoming reversal, for example. And that would show up in an OBV trendline reversal. But again, I mean, I probably, this falls under that subsection of information, nice to have, but again, I don't know how to say this other than if you can't trade with the straight indicators we've given you, very clean, 4 or 5 straight, SMAs, the basic indicators that Option Stalker uses, that we use, you should not, and you can't trade successfully with those, do not branch out to other ones. These other indicators are not going to make the difference for you. What they're going to do is, if you're already a successful trader and you already can be pretty confident you're going to have that win rate, you're going to have that profit factor every month, you're going to pull money out and you're good. Then you can start looking at this or that to try to aid and maybe, give you that extra percent or that extra little piece thing that might stop one trade out of 100 that you might have made otherwise. But to me, it's sort of, when you're not yet a successful trader and you start looking at these other indicators, you start thinking, well, what I'm doing is not working, so I'm going to go to these. And that's not the case. Those other ones aren't going to help you. Your problem is usually a mindset problem, because the method that we teach and the method that we show and the indicators that we give are more than enough to make you a successful trader on its own. And if you can't do that, then you definitely have a mindset issue going on.
I had a question on Qualcomm, and I'm going to dovetail in what you just explained. Qualcomm, nice breakout, like the price action. You can see how it's through this horizontal. This is a high plus trend line, broke that a few days ago. Some retracement yesterday, but pretty minor. Still find support well above that breakout. And then today, you get the stock gapping up with the market. So here's your best indicator. And this is what we talk about every single live event session. Put up the SPY overlay, or you can use 1OSI in Option Stalker Pro, and you can see market opens up. It's the gray line. Market down, down, down. Market is into its gap. What did Qualcomm do? Qualcomm marched higher while the market was down. As soon as the market found support, What did Qualcomm do? It bounced off of the VWAP and it moved higher. I didn't need unbalanced volume. I didn't need MACD. I didn't need any of that other shit to tell me this stock was going higher. All I had to do was watch the price action and to make sure that I had the best D1 chart up. That's it. And I get people that send me charts all the time. I'm like, where the hell is the price action on that thing? You got 50 freaking indicators on there, and the whole thing looks like a spider web. I can't see anything. I definitely can't see price. And that really is the only thing that I need to see.
Example here would be PLTR. Someone asked here, what are my thoughts on PLTR? All I have to do is I pull up, I haven't even looked at the 5 minute. I'm looking right at the daily chart on PLTR. Without doing anything, I'm eyeballing it. I can tell you that there is an upward trend line that comes from around November 20th. Looks like it comes in around $27. I would set an alert there. If it goes above it, I would go long PLTR. PLTR looks great, great breakout. The only thing stopping it is that trend line, which may or may not provide some decent resistance there. If there's any resistance point, it's that. So I don't, like Pete said, I don't need anything else other than looking at that chart, looking at the daily chart and eyeballing it to tell you that. That's all I need. Okay, I'm putting an alert there, 27, done. So I don't need anything else. I just wait for that alert to go off, and then I take a look at what the market's doing. I take a look at the stock, and then I make a decision. I don't need option flow. I don't need OBV. I don't need any of that. So that's kind of the point we're really trying to hammer home. Hopefully it gets through to some.
And so I did have a question on HA reversals. How do you set the alert? Will and I are actually going to be doing a live event for One Option members tomorrow. We're going to go through a lot of the features on Option Stalker Pro, but you get the chart, you right click, you click create alert, select which type of alert you'd like, HA reversal, M5, bullish. And so the system is going to know that currently it is bullish. So you're going to need that flat red top and then that flat bottom green, and then you'll get the alert and you can evaluate the dip. But that's how easy it is to save that alert. So you would have gotten one right in here where the low is preserved, because right there, when you get that flat bottom green, this is where you would get your alert.
Okay. All right. I think that's it for the questions on my end here. For stocks like NVIDIA with no previous highs, how do I know where to sell when watching 5 minutes throughout the day? I don't know. How much are you up? I mean, what, you buy NVIDIA at 880? Maybe sell now. Take the profit. Again, where do you take profit? NVIDIA right now, probably. Look, there's not been a stronger stock, right? Every time you could ask that question. You could have asked that question way back in February. You could have asked it in January and so on. Well, how much higher can it go? When could I sell? And if you held it, you'd be up like $300 right now. So, could it go to 1,000? Could it go to 1,200? It could do all of those things and more. So it really then comes to how much profit do you have? Are you day trading it? Do you have some other reason that you're holding it? For me, if I was in decent profit on NVIDIA right now, I probably would take it. But that doesn't mean it's not going to continue to soar.
And for me, when a stock goes parabolic, I'm writing an article on this, which NVIDIA pretty much has. If you can draw a line from here to here, it's going to have a big bend in it and then take off. I will wait for that bearish engulfing candle. I mentioned this a little bit earlier today. Until I see that, I'm going to keep holding it and riding it. Am I going to keep adding to it up in here? It's getting pretty lofty, not when it runs like that and not when it's starting to distance itself from the EMA 8. But I'm not going to be shaken out of it. Who knows how high this stock could go? If you were long in here when it started to lift off, do you see any bearish engulfing candles in here? Nope. I sure don't see any. Well, now in here, you're getting ahead of earnings. Yeah, this would be prudent to just take some profits after a run from $500 to $720. Yeah, I think you could take some profits there going into the earnings announcement.
All right. Any other things on your end?
Not really. We're just working on new features. Will and I have still a bunch of stuff planned, and I'm going to be trying to figure out ways to do more on the swing trading side. I want to try and automate some bullish put spread searches that really set up well. That means doing some option analytics. So that's kind of one of the projects I'm working on. Plus, I'm trying to write as much as possible before it gets super nice outside.
That's a good idea. As for my pick, let me see here. I still like Caterpillar. I might go with Caterpillar here as my pick. So I'm going to stick with Cat as my pick. Caterpillar.
Caterpillar is your pick. Okay. And yep, it's got this horizontal breakout that it's trying to get through, and nice strength all the way up in there. And this, obviously, this is what we want to see, folks. I mean, we don't want to see only tech stocks rallying. Caterpillar, heavily involved in construction and mining. It's a heavy equipment manufacturer. So yeah, we'd like to start seeing some other sectors participate. Now, let me just take a quick look at UPS, because I'm wanting to see the transportation sector improve, and there's not a lot of improvement on UPS or FDX. So would like to see some more strength there, because that would tell me that the overall economic backdrop is starting to improve. Both of those companies ship globally too. So UNP, I'll just take a quick look there. So I'd like to see some strength in here. Okay, Rail's doing a little bit better. So at least we're starting to see some strength there. All right. Well, okay. Harry, thanks so much for attending.
Sorry I was late. I had to drop my wife at the airport, but I'm here now. And thanks, Pete, for keeping the store open. And good trading, everyone. We'll talk to you next week.
All right. And IBM is my pick. We will see you next week, everyone. Trade well.
Bye-bye.